Thank you for joining us for a recap on the third quarter. I'm Angela Palacios, Partner and Chief Investment Officer here at the Center. Joining me today will be Mallory Hunt, Portfolio Administrator, and Nick Boguth, Senior Portfolio Manager. The third quarter of 2025 was one for the record books. The S&P 500 hit 23 new all-time highs, the most in a single quarter since 1998. Bonds and small cap stocks joined the rally. The Russell 2000 hit its first record high since 2021, and the Bloomberg Aggregate Bond Index rose for the third straight quarter. International and emerging markets also kept up the momentum, making 2025 a strong year for diversified portfolios so far. Inflation remains above the Federal Reserve's 2% target, but is tempered for now. The Fed cut rates by 0.25% in September, with more cuts likely as the labor markets have been showing some weakness. Tariffs are surging, over $31 billion collected in August and September each. If that pace is sustained for an entire year, they could outpace corporate tax revenue. Now I'll hand it over to Mallory.
Thanks, Angie. As of October 1st, the U.S. government has entered its first shutdown in nearly 7 years, triggered by partisan gridlock over healthcare funding and proposed spending cuts. Key agencies like the Bureau of Labor Statistics are frozen, delaying vital economic data and leaving the Federal Reserve without the tools it needs to guide policy ahead of its next rate decision. What may or may not be surprising to you? Markets are not panicking and remain steady. In fact, the S&P 500 has posted gains, fueled by optimism around cooling inflation, strong corporate earnings, and potential rate cuts. And history backs this up, showing us how the S&P 500 has consistently rebounded in the months following past shutdowns. While this one carries unique weight due to proposed permanent layoffs and structural changes, investors should remember that volatility often presents opportunity. Shutdowns are temporary, but disciplined strategies, diversified portfolios, and long-term investors who stay the course tend to come out ahead.
Great update, Mallory. And despite tariffs, shutdowns, and what seems like even more uncertainty than usual, the S&P 500 was still making new all-time highs this quarter. Is that a sell signal? Does that mean the top is in? History suggests the opposite. Forward returns have been better after all-time highs than other days. All-time highs are common and should be celebrated. At the same time, they offer a great opportunity to assess your allocation and ensure you are taking the appropriate amount of risk for your financial plan. Another headline from the quarter was gold's performance. It is continuing its incredible run and is now creeping up on 4,000 per ounce. Like any investment, though, consider the risk before choosing to invest. Gold's performance tends to come in bursts and has a history of significant crashes, as illustrated by the chart in the written commentary. We diversify and build portfolios exactly for years like this. We had a significant correction back in April and felt good about where portfolios were. Now the S&P 500 is making all-time highs and we feel good about where portfolios are. That is the benefit of diversification and a strong process. If you have any questions about your financial plan, please don't hesitate to reach out. Thank you for listening.